Going to do some examples from chapter 5, just some of the homework, similar to the homework. So let's get started. In your book, if you have the text, it's 5-3. So this time we are dealing with inventory. So June 2nd, they buy $23,000 worth of inventory on account with these credit terms, FOB shipping point. So we're responsible for the shipping. We take ownership once it leaves the seller's warehouse. So we're not going to worry about the credit terms until we actually utilize them. So let's go ahead and make the journal entry. So I'm going to increase my inventory by 23,000, and we bought it on account. So it's going to be accounts payable. I'm going to credit for 23,000. Then they pay $110 in freight charges. So I'm going to decrease my cash and I'm going to increase my inventory because anything that has to do with getting the inventory to you is included in the cost of inventory. So as a buyer, there are only 3 accounts that you can choose from: inventory, accounts payable, and cash. So they returned $6,200 of the merchandise due to damage during shipment. So what I'm going to do here is decrease my accounts payable. And I'm also going to decrease my inventory. And then they paid the amount due less the return and the discount. So make sure when you calculate your discount that you're calculating it on what you still owe, not what you owed initially. So my accounts payable, it's going to be the 23,000 minus the 6,200 that I just returned. Also, I'm within the discount period. So it was, how much was our discount? Our discount was 2%, so I'm going to multiply this by 98%. Okay, so, oh, excuse me, that's not how much I owe. That's how much I'm actually paying. So let's go ahead and do that. So my cash is decreasing by this. I'm writing the entire amount of the 23,000 minus 6,200 off. Okay, sorry about that. So your accounts payable is what you actually owe. I originally owed 23,000, and then I returned 6,200 of it. So this obviously does not balance. So the balance goes to inventory. So this was our discount, $336, that 2%, okay? So the next one is coming from the seller's side. So I'm doing 5-4 here. So we sold 66,000 of sportwear on account. Cost of goods sold is 33,000. So let's go ahead and record that sale. So it's on account. So I have accounts receivable, and that's going to be 66,000. And then I have revenue, 66,000, okay? I also need to include my cost of goods sold here. So my cost of goods sold, they just told me, was 33,000. And I have inventory leaving the warehouse or my store of 33,000. We received a $5,000 sales return on damaged good from the customer, and the cost was $2,500. So we are going to have a return and allowance account because we can't put that back on the floor because it is damaged. So we're lowering essentially our revenue by that amount. And then we have accounts receivable, 5,000. Now the book will tell you to go ahead and put that back into inventory. The problem is you're not going to be able to sell it again because it's damaged, obviously, but for the sake of the book, we'll just say inventory is 2,500, and then we also have a cost of goods sold that we're reversing out of 2,500 there. So then we finally receive the payment from the customer on the amount due less the discount. So let's figure out how much that's going to be. How much are we actually receiving in cash? So it's going to be 6,100. Excuse me, 61,000 minus our discount. So let's just start from the beginning. So 66,000 minus what they returned, which was 5,000. And did they pay within the discount period? So they did pay within the discount period. So they get a 2% discount. So I'm going to take that and I'm going to multiply it by 98 because that's what they owe. So you are receiving $59,780. You're going to write off the whole accounts receivable because they don't owe any of that. And again, that's your 66,000 minus the 33,000. So not 33,000 minus what they returned of 5,000. So this does not balance. The difference is going to go to a sales discount. So if you were the buyer, it would go into inventory, but you're not, you're the seller, so it's going to go into sales discount, which is also 2% of the what they still owed, which was the discount that they got because they paid within the discount period.